Good weekend all. Ira Epstein, and here we are with your metal market wrap-up, your weekly edition for this spooky day of Friday the 13th. Yeah, 9/13/2024. You know, we're going to have a lot of economic data this week, but it all takes a back seat. Every piece of it is secondary data. It doesn't matter what you think it is, to the Wednesday announcement this week at 1 o'clock by the FOMC and what are they doing with interest rates. And to make a long story short, if the Fed, this is all my opinion obviously, if the Fed stays truly data dependent, it's 25 basis points. If they want to bend that and be forward thinking now, not that just data dependent, but now they're breaking away from that. And they say, we want to get ahead of this curve. We want to deal with this labor market, make sure it doesn't get too soft. They abandon the 25 and they go big, the 50. At the beginning of the week, it was near a 30% chance. In other words, at first, the week before, the market was saying 50-50. Then a bunch of data came out in jobs, and it said it just doesn't look like the Fed has to do that. And it was actually CPI and PPI came out strong. And then you'd have to say, if you're purely data dependent, that wasn't jobs. Jobs have been neutral to weak, these reports recently. It is saying, well, you're still a little sticky. You've had a little bit of an uptick in both some numbers in the CPI and PPI. But if you're going to get ahead of the curve and you're looking at the jolts and you lost 400,000 plus jobs and unemployment is hovering now 4.2, 4.3, and you want to make certain it doesn't explode, you go the 50. I don't know how to say it any other way. I'm sure you have your own thoughts, and whatever they are, I'm sure they're right. Now, I did a special report today, and I did it on the gold market. And I already know next week I'm doing a silver report. And I think the silver is going to be a big one also. Silver is looking real interesting. Now, what do I do on my reports? All right. In these reports, I look at a series of things. First off, the gold report is going to be on gold, futures, GLD, and GDX. So I'm covering all three. I'm going in the report to look at seasonal studies. So I'm going to give you the 5 and the 10-year seasonals at this time of year and what it does, and that's Santa Claus time. I'll tell you that ahead of time. And then I take you into a seasonal that I've never shown you, which has to do with one thing. I can take certain time frames. I can do Fed time frames. I can do elections. I wanted to show you, because I've not shown this before, the seasonality over a, let's say, 5-year period. You can do 5, 15. You can do 5, 10, 15, 25. You can go at any numbers you want. What the market normally does in just the days leading up to the election, not months, days, and the days afterward. So I show you some of the work that I use as I get along this. So it's an interesting report. I'll share this with you. I don't want you to buy over these Bollinger Bands, but I most certainly am looking at the pullback for you and where that might be in the market that I'm seeing, the ideas of getting long, so we cover that. We're going to be looking at the seasonal charts. I didn't show the QT price counts. I could have, but a lot of you get that already, so I just decided not to this time. It is time sensitive. It's only going to be up. It'll come off our website on Wednesday. And as I said, I'm then right behind it going to be doing a silver report that I will put the price counts in. But I've used price counts for my subscribers already on some things, and I just felt, this one, it doesn't matter. One of my counts, as you know, is the 2,600 level. You've heard me say it on the daily charts. I had some wise guys write and give me a hard time on the site. Oh, look at you, look at how wrong you are. And that was a week ago. And now to that person, look at how right I was. You got up and through that. So you get those guys. And by the way, I don't walk on water. I am going to be wrong. No question about it. If you're looking for the guy that isn't wrong, turn this channel off and erase it. I am the guy that's going to be wrong. And I'm also the guy that will tell you, boy, did I get that wrong. And I'll be the guy that comes out with the same verve that when I'm wrong or right, yes, I got that right. Darn it, I was wrong. Trading is hard at the very least. Okay. When we look at gold, what are you going to say? It's mid-month, you're up 3.2%. The weekly chart, which still is looking at contracts that aren't actively traded, got that? DEES is the active traded month. DEES is higher than that, but 2586.80. When you look at the weekly closing chart, new all-time high. All-time high. When I look at a weekly bar chart, away you go. And again, these are weekly charts, so it's looking at what is separate. It's one of those. It's an off month, but that's what it's looking at. The swing lines are bullish, still looking higher. When you look at how it's going through, it's there. Some people say, Ira, why don't you just show the DEES gold? I really like to do a continuation chart. I find them better than just go to that monthly chart, because sometimes those monthly charts, first of all, you can't get the data going all the way back because the lifespan of the contract isn't that long. And I like that. I like that the data will give me my 200 weeks. You know how many 200 weeks are in a weekly chart? You got to go back how many years, folks? Come on, you're smart. 4 years. Okay, here's 2024, back here's 2023. I want all this data on the chart. So that's how I do it. Doesn't mean I'm right. It's the way I like to do it. Higher lows, higher highs. So where's the resistance? Ta-da. You've got what's called a gorilla glue trade, all right? And that's when the market almost every week is just hitting that Bollinger Band. A week or so it's over it, a week or so it's under it. The obvious spot of the contention for support is back at 2412. Do I think we're going there right away? No. So there's got to be a better spot to look at it, and that's in that metal report. And again, you'll be able to go, if you move up here, there's an icon for it. If you go to iraepstein.com, look on the top left of the website. In bright green, I think it's green or gold, I don't know what they're doing tonight, but it'll be there. You give it a click. If you're a subscriber, just go into your member login area. Everything's there for you already. Higher lows, higher highs, and do we have an embedded reading? To be embedded, both numbers have to be over 80 at least 3 weeks in a row. We don't, that's moving instead. We are not quite, I don't know if we're there or not, we're just about there. And if so, you still like the market. But would I tell you to buy a Bollinger Band? I'm sharing this with you, no. Now the gold-silver ratio, the reason I'm getting excited on silver, I have a feeling this market made a key top against here. That's why I put these numbers up. And if I'm right and you close under this, if you take this out, you could be going back into the 70 level or so, something to keep your eye on. In the silver, the trend right now is most certainly to the upside, higher lows, higher highs. We don't have to worry if it's embedded. It's not. Momentum's picked up. Trend is picked up. I think the trade is a buyer at the 18-day average now. The objective is 31.72, over $1 higher than where you're at that upper Bollinger Band right now. The copper is not in the same picture. The copper has just gotten itself picked up. You can see it went down and challenged what we talked about. On the way down, I had brought up to you, and go back, these YouTube videos are there. We were talking, would the support of these longer-term averages, the 200, the 100-day, and the Bollinger Band, act and support the market? Most certainly, I would have been saying that's where I think the pros are covering shorts, because I understand what algorithms, at least some of them do, and that's what I would assume that they build in. It's like an RSI or an MACD model. Well, I happen to use stochastics for it there, and my work would have said it's okay to be out of shorts. Why? The odds of staying under the Bollinger Band, only 5% of the time. Well, as it turns out, luckily, it's just been going sideways. It hasn't gone up much, but it was a good spot to cover shorts. Platinum just got itself up and over the 18-week average, and it's fighting a battle now to stay over 996.20, the 200-day average. Generally, that first thrust up, and we've done that a couple of times, you get thrown back. But this is a thinner market, and when it goes, it just goes. It's one of my least favorite of the metals to trade. And if you're a subscriber of mine, how many times a year, you know this, do we even put out a rec on it, but it's always worth watching. The dollar is still bearish. You have an embedded reading, rally still here, look to be sold, but do you go through the FOMC meeting? Do you dare go through it? It isn't so much